So for this week's Trades of the Week video, we're going to do something a little bit different. I mean, obviously, in past videos, we'll look at trades that have come through and so on. It's a relatively quiet week for new trades anyway, but I just really want to make a comment about the Swiss franc movement of last week. And, you know, really some of the dangers that a lot of, sort of newer traders have is that the overexposure that they put on their account, they use too much margining, too much gearing, therefore, too much leverage, whatever word you want to use, to really put too much risk on their account. Because when moves like this happen, you can see the Euro-Swiss chart there, it can have a hugely negative impact on your account if you're the wrong way around, and Sod's law would suggest that's probably going to be the way it's going to be. So really what we recommend is to make sure you keep that risk low, 1 to 2% of your account, something like that, and don't use some of those sort of 100, 500 to 1 margins that are available with a lot of these FX brokers these days, because what happens is with slippage you can end up really getting on the wrong side of this trade. We look at CAD Swiss as an example. We had a lovely buy here a few weeks ago and we hit target on it, but if you hadn't, you started your stop in, let's say your stop was here, then you're not going to get filled at your stop. You're going to get filled dramatically lower, maybe in this case best part of 1,000 points lower, and of course at £10 a point, that's £10,000 of losses there, and that's kind of what's happened there. The extra speed at which that market's moved, over gearing of people's account, has led to significant negative balances on a lot of traders' accounts there, which has led to a couple of brokers going insolvent. It's really what it comes down to is mismanagement, poor management of their own accounts there, and trying to use the margining that these brokers have, I guess, laid on for them quite irresponsibly, in my opinion. Really keep that risk low. That way, if you have a move of this magnitude and you are on the wrong side of it, it's not going to have a massive impact on your account. You know, it's about damage limitation in case something like this happens. And if you risk 1 to 2% of your account, it allows you to stay in the trades, continue trading without your account getting completely blasted just by one move and one move alone. So just think carefully about your trade sizing, guys. Keep that risk size low. That way, if something like this does happen, you're not going to be affected and taken out of the game. Plenty of opportunities are going to be this week, next week, and for a lot of those traders with negative balances, they're not going to be anywhere near this market because they're blown up, they've lost all their money, and they can't continue to trade and make speculative profits from the markets, which will be there and will be there for a very good 2015, we expect.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.